The federal government stepped in to help a failing financial institution in this country the way they did over this past weekend.
For example, the first company that got in trouble was Bear Stearns. They were nice people who'd made some bad mistakes, but they certainly were not critical to the marketplace. The marketplace was stunned when the Federal Reserve essentially bailed out Bear Stearns. And that's what took a correction and turned it into a crisis.
Government interventions became chaotic.
Wachovia was essentially taken over by the Federal Reserve and sold to Citigroup.
American taxpayer has been asked to take on a big burden all at once, $700 billion to shore up a financial system on the verge of collapse.
A lot of people have heard about what's called the bank bailout. It's technically called the TARP program. The reason healthy banks were forced to take TARP is Bernanke, who was head of the Federal Reserve, was afraid that if he just bailed out the bad banks, that would mark those banks. So he very
Hello, everyone. Welcome to the weekend edition of Markets Around the World. I'm K2, and today we'll cover the latest market updates, key trends, and critical levels to watch. With the upcoming election, we'll see who takes the presidency, Kamala or Trump. Let me know your pick in the comments. If you love the markets as much as we do, don't forget to subscribe. Let's dive into the top headlines driving the markets and what lies ahead. Investors are bracing for a potentially lengthy wait on US election results, which could take days or even weeks. Meanwhile, all eyes are on Federal Reserve Chairman Jerome Powell's Thursday press conference, which may shift market focus from the election. The November Fed meeting, though likely less dramatic than September's rate cut, could still bring insights into future monetary policy amid election uncertainty. NVIDIA Corporation will replace Intel Corporation in the Dow Jones Industrial Average, marking a shift in tech dominance. Intel, a Dow member for 25 years, has struggled to keep up with industry trends, particularly in artificial intelligence. Burdened by $19 billion in restructuring charges and lagging AI revenues, Intel's stock trades far below its 2000 peak. NVIDIA, in contrast, has surged 850% over 2 years, driven by AI demand and growth in data center revenue. In October, U.S. job growth nearly halted, with only 12,000 non-farm payroll jobs added, the lowest since December 2020. This slowdown is attributed to aerospace industry strikes and disruptions from Hurricanes Helene and Milton, which affected data collection. Despite these challenges, the unemployment rate remains steady at 4.1%. This employment report is the final significant economic indicator before the presidential election between Democratic Vice President Kamala Harris and Republican former President Donald Trump. Current polls indicate a highly competitive race, like it or not. With Tuesday's presidential election looming, consumer and corporate anxiety is rising. A FactSet report found that 116 S&P 500 companies referenced the election in recent earnings calls, with 38 citing slowed economic activity due to election uncertainty. Despite this, many executives expect a post-election rebound, viewing the election as just one factor among broader economic pressures. Polls show a close race between Vice President Kamala Harris and former President Donald Trump. Warren Buffett's Berkshire Hathaway boosted its cash pile to a record $325.2 billion in Q3 2024. Now making up 28% of total assets and covering $288 billion in Treasury bills. Buffett also cut Berkshire's Apple stake by 25%, or $14.2 billion, to $69.9 billion, with net share sales totaling $34.6 billion. Notably, Berkshire didn't repurchase any stock, stating buybacks would resume only when shares fall below intrinsic value. Now let's dive into some key data points I want to highlight for you all. I'll begin with gold has experienced a remarkable surge this year, briefly surpassing $2,800 per ounce for the first time in history. This 33% year-to-date increase marks its best performance in 29 years, outpacing the S&P 500's 20% gain. Notably, gold has achieved 41 all-time highs in 2024, the most in a single year this century. This positions gold for its strongest annual return in 45 years. According to the Conference Board's Consumer Confidence Survey, 51.4% of U.S. consumers expect stock prices to rise over the next 12 months, the highest level of optimism since the survey began posing this question in 1987. The Euphoriometer, a proprietary indicator measuring U.S. stock market sentiment, has reached an all-time high, surpassing levels seen during the 2000 dot-com bubble. This surge indicates unprecedented investor euphoria, raising concerns about potential market overvaluation. Historically, such extreme sentiment levels have often preceded market corrections. Analysts have recently reduced their 2025 earnings growth projections for the Magnificent Seven tech companies by nearly 3 percentage points, now anticipating a 16.9% increase. This adjustment reflects concerns over some tech giants' less optimistic outlooks. Despite this revision, the Magnificent Seven are still expected to outpace the broader S&P 500, which is projected to see earnings growth of about 12% in 2025. The chart tracks S&P 500 capital expenditure cycles from 1998 to 2024, highlighting key investment surges during the dot-com bubble, housing bubble, shale revolution, and the recent AI boom. The current AI-driven CapEx spike has reached historic highs, raising concerns about a potential cyclical downturn similar to past bubbles. Let's dive into the S&P 500 heat map and last week's market performance highlights. Microsoft and Nvidia were down over 4%. Advanced Micro Devices, AMD, dropped 9% after disappointing earnings, and both Eli Lilly and Tesla declined by 8%. On the upside, Amazon and Alphabet, Google, rose over 4% on strong earnings. For the weekly performance of major U.S. indexes, S&P 500 was down 1.4%, NASDAQ fell 1.6%, Dow Jones dropped 0.2%, Russell 2,000 small caps declined 0.2%, VIX Volatility Index spiked 9%, WTI crude oil tumbled 3.2%, silver decreased 3.2%. Gold edged up 0.1%. The Fear and Greed Index has returned to a neutral level of 49. Do you think the upcoming election and Fed meeting could push it back to extreme fear? This week's most notable earnings. Monday, Palantir, Hims & Hers. Health, Marriott, Wynn Resorts. Tuesday, Supermicro Computer, Ferrari, Archer Daniels Midland, Melco Resorts, Devon Energy. Wednesday, ARM Holdings, Qualcomm, AppLovin, Celsius Holdings. Thursday, Arista Networks, Block, Square, Fortinet, Cloudflare, Datadog, Unity Software, DraftKings, Airbnb, Pinterest, Rivian, Lucid Group, Moderna, Barrick Gold, Halliburton. Friday, Sony. If you're curious about how November usually performs, this calendar is a must-see. It provides valuable insights into historical trends and can help set expectations for the month ahead. These charts are especially important if you're looking to make informed decisions based on seasonal patterns. Take a moment to pause the video and grab a screenshot so you can refer to it whenever needed. This way, you'll have a handy guide to November's typical performance to assist in your market analysis and planning. Here's the key events for upcoming week Monday. Palantir Earnings Tuesday. U.S. Presidential Election. ISM Services PMI, Supermicro, and Ferrari earnings. Wednesday, election results, ARM and Qualcomm earnings. Thursday, jobless claims, Fed rate decision, Powell's press conference, DraftKings, Arista Networks, and Block earnings. Friday, U.S. consumer sentiment, Sony earnings. All right, ladies and gentlemen, that's all for this video. If you found value in this content, please like and subscribe. If you have any questions, drop them in the comments below, and I'll get back to you as soon as I can. Thanks for watching, and I'll see you next time. Bye for now.